How's it going, everyone? Welcome to SMT FX's YouTube channel. It's been a while since we've posted a video. It's because we've been quite focused on the restructuring of our course, as well as rebuilding our website. So we've been working on quite a few things on the back end. So yeah, but we're gonna be getting back to, sharing more content on YouTube so that we can help out as many people as we can in the Forex community. But yeah, I'm gonna be diving into a CAD trade that was taken last week. This was a trade that was basically, it follows a swing approach that we share at SMT FX in our course. It is under our course called Swing Playbook. So quite a few members have understood and read through my explanation why this trade was taken. But yeah, I'm going to dive into what the idea behind this trade was and how it played out. So let's get into it. Now, CAD yen is one of my favorite pairs to trade, mainly because I find it when it moves for swing trading, it moves quite impulsively, and it usually takes out the previous high of the market or the previous low, depending on whether you're taking a long or a short. So essentially at this point, I was looking at CAD yen and going, cool, we've been fairly bullish, and you can see this was sort of a rangy little point in the market, but what we were doing is we were just doing this. So this was essentially just a pullback phase where the market was just sort of consolidating, but there are lots of trades in there that you could have traded because it did react off quite a few zones. You've got a short here, you could have taken it down, and like I mentioned, it sometimes usually takes out the previous low, so you could say the low is here, and it did end up taking that low. So essentially the idea was, because we are in a pullback phase and we've seen this huge impulsive move up, now the first thing I basically did was looked at the 8-hour and just looked at price. Could there be a zone here that would be valid? So obviously I had this zone marked up, there's a little bit of imbalance left, and there was an extreme point over here. So I had these points marked up on the 8-hour, and then I dropped time frames to the 1-hour, and this was essentially where price was as I was looking at the chart. So let's refine this. Got this little candle here, and yeah, I was looking at this point. So what we had a supply zone over here that was created. It's really clear on the 4-hour. I could see the last buy before the sell, huge wick up and down. So this was a pretty strong supply zone, I'd say. I was looking for shorts here, but I didn't really take it because I wanted to see this low being broken to confirm that we're still sort of, either we're going to be continuing in this this sort of pullback phase we're in, or we're just going to break structure and turn bearish. So that didn't happen, so there wasn't really any shorts to look for here. But yeah, so we have this supply zone here, 4-hour supply zone. This 4-hour supply zone was invalidated by this huge impulsive candle that pushed up. It also followed through with a break of structure of the 4-hour structure point. So we did break the 4-hour high over here. That confirms that we are still bullish. So looking at the 1-hour, saw this last candle, right? This was the last sell candle before the buy that broke structure and invalidated the supply zone that was over here. So what I did was I waited for price to sort of, tap into this zone, and I dropped to the 1-minute time frame. Now, usually what I do is I don't take the first reaction. You see how usually what the market does is you see a reaction like this. So let's say you have a zone here, you get the first reaction and then a sweep, because this essentially grabs whatever orders that might be here of people trying to catch the first move up. So that was what I usually don't try to avoid, is taking the first tap. But yeah, so we've got the first tap, didn't really tap in, so waited for price to set up. And then what you have is you have price basically pushing all the way down. So you've got this last huge impulsive sell candle and then a buy, and you sort of see price struggling to break this low here. so we're not really breaking any lows that we're creating. And we have a little bit of liquidity resting here, and we have a push up, right? So we created a new higher high, and essentially you could have gotten in here, but what I waited for is I want to look for proper bullish order flow being created, as well as a invalidation of a zone over here. So we have a supply zone here that that broke structure here. It didn't really break this point, but it is a supply zone because of the impulsive nature of it. So in this case, what I looked for is, you could look for a trade here, but this move up didn't really break this point, so no trade over there. But yeah, so what price did is it sort of pulled back down, and for me, when price was pulling back down, my idea was if it's not going to break this high, then there's no reasons to look for longs at this point, because we want to see a sort of bullish order flow being created where it looks like this, right? It's creating more highs and creating more higher lows, and that's what we did, right? We basically broke this point here, and we invalidated a supply zone here, and we also did get a chock here, which is also a it's followed with a liquidity grab. Basically lots of orders, you've got liquidity, you've got relatively equal lows there, so we've got that point. And what we have is we have this clear sell candle, so we basically have quite a decent few reasons as to why this trade would work. So this is where the trade was taken. We have this sell candle. You could take a trade on the distal, the equilibrium, wherever you want to take it. I found that the 25% spot or the 35% spot is quite a sweet spot to basically put your orders, your limits, when price is this clear. So I had my trade there, and essentially what we did was we came back, we tapped into it, and we pushed off. Now for me, usually what I do is, in terms of the swing style, is conceptually speaking, if price was to follow through with this, it should essentially sweep the previous high, because that's how bullish order flow is created. So the take profit target was set at the previous high here, and it was left to run, right? We just leave it to run, and no real I'd say there wasn't really much of a management, because I don't trail my stops in terms of swing trades. But what I did was, as soon as it broke a significant high point, so you see how this high was broken, so as soon as this high was broken, I put my stop loss to entry, because if price is going to continue in a bullish order flow manner, there is no reason for price to come back down and violate in terms of breaking the order flow that was here. So that's usually what I do. And this trade, if you sort of look at data point not available, so if you sort of look at where price is now, obviously if you held your trade this long, you would be running at quite a decent amount of profit. So let's say we had your trade running all the way now, you would be running at 156.9 R. So that's basically the power of swing trading, because if you did hold your trade all the way, you would be raking up quite a bit of profits. Now, would I have held full volume here? Hell no. Nobody would hold full volume for a trade that's running at 46R at this point, which was where my take profit target was, and it was closed at that point because I wasn't really interested to hold it for that long. So that was the trade. Now, if you really wanted to swing trade and set a much higher target, where would you have set it? I'd say the next point you could have set it would be maybe a daily high. So you could have set it at this point here, which is just a bit higher from where I set my target. But yeah, that's basically a really nice swing trade that there haven't been many nice swing trades, but this was a good example of how how simple a swing strategy can be, because you realize I don't really have a lot of drawings up. I've just got 2 lines and a box and the only point where my chart looks messy is at my entry point, where I'm basically understanding what the market is telling me and marking it up accordingly. So yeah guys, that will be, the end of this trade recap. I hope you guys sort of have learned a little bit from what I've just explained really briefly about the trade recap and the idea behind why this trade was taken, and I'll see you in the next video.